Good morning. What's up, guys? Welcome. We are live. You are looking at a 5-minute chart on Nasdaq futures. This is the December NQ contract. Today is October 29th, 25. You guys ready to get to work? Let's do it. We are 58 seconds out from the close of bar 11. Maybe let's see if we can get something done here. If we get a nice clean bull body, closing above the wick high of 9, then all of a sudden I have a trade I got to put on with a stop limit buy. Let's see if the bulls can get that done for us. Good morning, guys. How we doing? Trev, good to see ya. Javaz, how we doing? Bruce, good morning. Giovanni Joe, welcome in, big dog. Sergio, good morning. Calc says, I just got laid off. Am I cooked? I'm a mechanical engineer. Well, you know what? The way that I see it, brother, today's the first day of the rest of your motherfucking life. Get to work. Get to work. 6 months from now, you might look back and say, fuck, I'm glad they thought I wasn't good enough, or thought they didn't need me, or thought they couldn't afford me. Hey, maybe they just couldn't afford you. Maybe you're too valuable. So pay yourself what you're worth. Get to it. All right, bar 12, 438 out. Jerry, good morning. Hey, Kevin, good to see you. All right. All right, ATR here on NQ. Again, the 5-minute chart is currently 21. You know, not massive, but we can work with 21. There's nothing wrong with 21. All right, how we doing today? How we doing today? Personally and trading. It's not all about the P&L. You can be red and be having a great day. You can also be green and be having a really bad day. Perspective. But how are we trading so far? Big ol' reversal, man. Well, you know what, Michael? A non-zero percentage of days are going to be both. Eventually, the roulette wheel hits 00, doesn't it? But you're alive. Could be worse. But hang in there, big dog. Yes, remember guys, today, 1 o'clock Central, of course, we have the interest rate decision. And then obviously, you know, there's a lot of comments made right after that, or shortly after that, I should say. So this afternoon, be very careful. If you're trading take profit, not that I would trade FOMC anyway, but I think I got an email. Double check, make sure I have this right for you guys. Almost certain. Yeah, they're not going to let you. You are not allowed to trade the FOMC rate decision. Now, you can trade while they're talking if you want. And I don't think that's, you know, once we rip the Band-Aid off and the first couple of statements are made, I think, you know, usually you're fine if you get a reasonable setup that is. But the actual release, if you're in a take profit pro account, do not trade that. They will take it away from you. So that's 1 o'clock Central, 2 o'clock Eastern, noon Mountain Time, and 11 a.m. if you're out on the West Coast. All right, 10 seconds out here from the rollover of 12. And so far, a whole lot of nothing, but 12 could set us up for a nice bar here on 13. Let's see if we get a nice bull body. John, got my first 3 payouts from Apex yesterday. Have 3 payouts from Tradeify to request today. Yeah, isn't it funny how that happens? When you start getting payouts, they start just coming. Just take good trades, good trades, good trades. Keep scaling horizontally. Keep trying to get more and more and more funded. So just head down, good trade after good trade after good trade. Cut the losers, take the winners. You know, within the framework that you're trading. If it's RAM, within the RAM framework. And then all of a sudden you look up. And you look at your Rhythmic or you look at your take profit dashboard. And you're like, oh shit. I have like 4 payouts to request. Isn't it funny how that happens? All right, so, you know, those of you guys asking about Apex with the news, you know, feel free. You know, listen, guys, this is the way I look at news like the FOMC actual rate decision. If you get really lucky and it gets you to payout territory, Apex has the 30% rule. You know, no one day can make up more than 30% of the profits when you go, the total profits when you go to request the payout. So you already have had to have made good progress in the account for this to put you over the payout threshold. And in my opinion, news is 50-50. I think that's not just my opinion. I think that's reality here because the market is relatively efficient, not perfect, which is why we can find a little bit of edge. But it is pretty efficient. So news like this is going to be 50-50 as far as direction, not as far as the result of the news, as far as the market's reaction to the result of the news. So it's not, you're not going to be able to get to a point where you can get to a payout that gets approved. Key phrasing there, just from gambling on, you know, CPI or FOMC. And it's 50-50 anyway. So aren't you better off just making progress normally and not trading the news? That's the way I see it. I really think for all you guys, trading fundeds on news events is going to hold you back. And you're going to look back in 6 months and say, well, that was a fucking waste of time. Just trade your setups. Be patient. Hit them hard when they come. And you'll look up in 2 months, 30 days, and be like, oh wow, my payouts went from 0 to 6. You know, it's weird with the Apex thing. Like, if you're in a new Apex account, you're like, okay, I got to trade 8 days. Or between payouts, you're like, I got to trade 8 more days. That's like 2 weeks of trading, man. That's crazy. It happens really fast. Just focus on taking good trades. And by the way, this is another reason why, you know, I would classify this as part of RAM, not actually the framework of price action, but the approach to trading prop, especially. Of course, you know, RAM is also a personal account thing. If there's no, it's not specific to prop, but it works well in both. And within the RAM framework, trading prop, the way that I like to approach it is scaling horizontally, but I don't like to necessarily, if I can help it, pass like 20 evals in one day. You know what I mean? I like to, I'm maxed out right now, but I like to add like 2 or 3 or maybe 4 accounts a day when I feel like doing it in the afternoon. Sometimes you know, if I'm not maxed out, it's like, God, I don't feel like trading evals. And I'll just trade the fundeds or I'll go do something else. But the reason I think that that's helpful, okay, we need bar 14 here. Bar 13 is a nice shrinking bull body. Let's see if 14 gives us something interesting. Maybe we can stop hunt the highest 7. What do you guys think? Kind of a short-lived level, but it's early. There's a lot of volume on bar 7. It's really, really obvious. So let's see if 14 can give us a nice clean bull body. I think that doing it that way, guys, scaling horizontally, but kind of having different start days for a lot of your accounts is really going to help your psychology, because when you have a bad day, all of your accounts are not at the exact same bad point. When you have different starting points, you're able to take payouts more often. You know, you might not take, you know, if you're in 2050Ks, you might not take a $40,000 payout all at once. But, I mean, who cares, right? That's like ego. I don't care. I'd rather be taking payouts like every week or multiple times a week, right? From different accounts, because you get to that point at different periods from the different start time accounts. I think that's best for psychology. And especially to just have money coming in often, which is also very helpful for your psychology, especially if you're bootstrapping this thing. When you have money coming in more frequently, like not once every 2 months, if you have money coming in like weekly from your trading at least, man, that's awesome. That's beautiful, because it creates this kind of illusion of stability, which is always an illusion anyway. Because if you work a 9 to 5, I mean, I hate to be the bearer of bad news, but like, I mean, we saw our brother today. If boss man decides that you're out, man, you're out. It's all an illusion. I'd rather carry that on my back, not some other dude or woman, right? Which is what you're all doing by trading, which is tremendous. So I think you know, add your fundeds day by day. If you're like, okay, I have 1 funded, how do I scale to 20? You know, trade 2 evals a day. Try to get at least 1 passed a day or so, or maybe 3-4 a week. Man, you'll look up and you'll have 14 fundeds, and you'll be like, shit, it's going pretty well. And all of a sudden, your first accounts are at payouts. You're like, shit. And then a week goes by, and your second accounts are at payouts. You're like, wow, that's cool. Do it that way, I think. I think that's the way that makes sense for most people. The whole, you know, let's pass 20 evals in one day and get a $40,000 payout all at once is cool, but I think it's completely ego-driven. It doesn't matter. You're not making more money. You're just getting it all at once, which, like, who gives a shit? Wouldn't you rather have the 40,000 if you're going to get it all at once, or coming more consistently? Wouldn't you rather have it coming more consistently if you get it all by the end date anyway? Because then you have money in your bank sooner, rather than the lump sum at the tail end. You know what I mean? Makes sense to me. Not to mention, if you, you know, if you're trying to bootstrap this, if you blow all 20 fundeds on the same day, or even this, man, you pass all 20 fundeds in the same day, it's going to be thousands of dollars to replace those, not to mention just activate those. right? I mean, it's going to be thousands if you pass 20. And if you're bootstrapping, that's not so easy, dude. So add them slowly. Add them slowly, but don't wait, 3 weeks between adding fundage. Just try to pass like 1 or 2 or 3 a day. And all of a sudden, again, the 2 weeks goes by quick. All of a sudden, you're going to be so focused on scaling horizontally, you're going to look up and, oh my God, my first 3 accounts I can request payouts on. And my second set, I'm a day away from requesting payouts on. And my 4th set, I'm 2 days from requesting payouts. And all of a sudden, you just had your best month of all time because you focused on just scaling horizontally and taking it easy and not trying to get it all at once. Which, by the way, completely unnecessary, all ego. I think you'll make the same amount, if not more, and have it coming in sooner and more consistently if you scale horizontally. All right, 15 seconds out from the close here of 14, which is a whole lot of nothing bar. Jonathan, what's up, brother? How we doing? Yes, sir. I'll be flat for FOMC. At least for that release. I'm uninterested. It's 50-50. Now will I trade while Powell's talking? I don't know. If we get a good ramp setup and maybe he's made a couple of statements and ripped the band-aid off, then yeah. No, I'm not too worried about that, but during the actual release, for me, there's no reason to be in a position. It's totally 50-50. All right, 4 minutes out here from the close of 15. See what it brings. All right, full range on the day here thus far. What are we looking at? 70 points. 72 points. Wow, it's tighter than yesterday. ATR here 19. Now what I'm looking at here, I mean, there's a couple different ways to look at this. So this is obvious. We could see this. I think we could also see this, or this could just be a big wedge. And when I start drawing this many lines, it means I'm confused. I don't like being confused. And I think the market, if I'm confused, the market is usually also kind of confused because, I mean, again, within RAM, you tend to see things relatively easily. And if you don't, we use the trick, right? What's the trick to understand context? Is this more of a range or more of a trend? And under the umbrella of trend falls soft bull and bear channels. Well, the trick is who's making money more easily, right? The stop limit order entry continuation traders or the limit order entry reversion scalpers. If the reversion scalpers entering with limit orders are making money more easily, by looking at the chart, you can tell, right? then it's got to be a trading range. If the stop limit entry continuation traders are making money a little more easily, then it's got to be some kind of trend, if not a soft bull or bear channel. So, you know, right now looking at this, I got to tell you, who's making money a little more easily? Well, it's definitely not the stop limit entry continuation traders. Got to be the limit entry reversion scalpers, which tells me range. Which tells me we got to let 15 do its thing and then see what 16 brings. Beautiful. Javaz says, I have 5 past evals waiting to be activated, but I'm trying to pass more first so I can activate them all at once and trade them in parallel. Do you think that's the right approach? I mean, Javaz, like we just talked about, brother, I would just, for me, no, I don't think that's the right approach, because it's just going to mess with your psychology when you know that every account is in the exact same boat. You know, why? Why not get started on the 5? I think it's better to just get started and have different start points at a lot of your accounts. Not only does it smooth out your psychology, but in doing so, when you have better psychology, your equity curve gets smoothed. I'm not really big on having, 20 Apex accounts all at the exact same place from the exact same start date. When you lose, it hits your psychology that much harder. And especially when you're new, that's a big deal. And also I will say, really guys, the only benefit at all, I mean, at least that I can see, of activating like 20 at once, or let's say you pass 10 and you wait to activate them because you're like, I want to pass 10 more and activate 20 at one time. What's the benefit there? Okay, let's say they're 50K accounts. Your first payout can only be 2,000 max. So your max payout is 40K. So is your ego saying, I need to take a $40,000 payout all at the same time? Why? Wouldn't you rather just get started on the 10 fundeds that you could be trading already? And maybe you take the payout there, and then you take the payout on the other 10 later? Is there something inside you that says, I need that 40K hitting my bank all at once in one payout? Who cares, dude? That's ego. Who gives a shit? And yeah, Joe, again, another good point that we keep forgetting to talk about. When you pass all at once, you're forking out a lot to activate all of them at once. Which is also big on your psychology, If you pass 20 Apex at once, you have to activate them all at once. You're paying like $2,000, if not more, depending on if you activate them on sale or not. So, it's going to be a little, somewhere around 2,000 or more. Maybe closer to 3,000 to activate them all on top of what you paid for the evals. So now you're into those 20 accounts for thousands of dollars. And they all have the same start point. If you lose 2 in a row, how are you going to be feeling? You're going to be feeling like your, $2,000, $3,000, $4,000 is at risk. And if you're newer, man, that might mess you up. That might throw you off your rocker, and then you blow them all and you're pissed. Just pass a few per day. I think that's the way that works best for almost everybody. Yeah, I'm copying across Apex and Take Profit. I love both of them. Hey, Niles, good to see you, brother. Nah, Pursuit, there's no limit over a Take Profit. I'm referring to the max on 50Ks for the first few payouts over at Apex. The max on the 50K fundeds is 2,000 per account. So if you have 20 accounts and they're all 50Ks and you're within your first few payouts, the max amount of money you can take is 40K, all at once. But I don't really see why that's everyone's goal. Isn't the goal to just make as much in totality as possible? It's ego, dude. That's why everyone trades, 6 minis. It's ego. Now listen, I'm not sitting here trying to say let's all trade really small because we're responsible and we want to use trading to pay the light bill. Nope, not me. If that's you, go watch somebody else. That's not me. I want to trade as big as humanly fucking possible. But I also know that prop works better when you trade small in each individual account. So the goal has got to be to slowly but surely scale the amount of accounts. And then, you want to trade personal on top of it? I think that's a good idea. All right, hey, hold up here. We gotta look at this. We gotta look at this. 17 seconds out. Copy trader. Engage. We got lows at 2. The wick low of 2 to see if we can stop hunt. Now, this might be a trading range, but I don't care because I'm looking to stop hunt. Oh, shoot. There we go. Leave that. Give that about 25 seconds, I think that deserves. And see if we can get a fill. My bar timer down here is usually like 2 seconds ahead. 2-3 seconds ahead. I placed that guy a little too early. I'm getting too used to that. All right, beautiful. We will get a fill. Let's go ahead and risk the signal body. Damn, Bears, take that through. ATR 21. Beautiful. Boom, better than half an ATR scalp. Beautiful little trade. Moving on. See that? Break down, take out the stops. Listen, guys. You can't make this shit up. Yesterday afternoon, we just did an hour training, members only live in the Tomb, and we talked exactly about stop hunting in ranges. Exactly that setup we just spent an hour on less than 24 hours ago. So let me explain here. When we take out the wick low of 2, all those stops get triggered and make a push. Now, if this ends up being a trading range, the probability is relatively good that we go back up into the trading range. It's relatively good. It's not good enough to buy right here, but it's good enough to take profit as a scalp rather than looking to make this a swing. If this does turn into a bear trend, I'll short the way down, right? But right now the probability is a little bit higher to take better than half an ATR on that scalp rather than look for, a full ATR or a full R or better with a swing trade and see the bulls are taking it right back in. Can't make this shit up, man. ATR right down here. It's that red number. It's the average range in points of a 5-minute bar based on the last 10 5-minute bars. If you missed it, if you blinked and missed that trade, yes, that was a scalp to the short side. Stop hunting the low of 2. Man, if you're not on the stop hunt and ram train, you are missing out. Try to keep up. All right, you see the bulls doing exactly that. This stuff just repeats. It just repeats. You don't have to win 90% of trades. You don't have to win 80. You don't have to win 70. Take things that make sense. Do logical things. This is what the entirety of RAM is built on. Do things that are logical. You know, have a little bit of edge, and then show up every day and do your fucking job. That's it. That's all we do. When you have a good systematic approach with, of course, there is a lot of discretionary decision making within RAM, but you learn it pretty quick. I think everyone is learning it pretty quick. The stress is low, which is very important. I would not want to be a trader, no matter how much money we're doing, if I woke up every day, fucking night sweats, like, I don't want to do this today. I'm scared. I'm stressed. This is awful. No, I mean, come on. Shave fucking decades off your life that way. That's not worth it. You want to make as much money as humanly possible, and at the same time, you want to be as least stressed out as humanly possible. Isn't that the whole goal? Isn't that kind of why you became a trader, to make your life better, not more stressful and worse? Now, we have fun trading. You know, I like trading. I like doing this. It's a challenge. It's entertaining. We're not entertained in the sense of, like, we're just putting on risk and gambling. We're entertained in the sense we're playing the game to our best of our ability. I like doing that. It's fun. But at the same time, I know what to do on every bar. It's very low stress. All right, 18, what you got? 440 out. All right, 18, what you got for us here? See that bull's right back into the trading range, spending time up here. Really common. Super, super common. When you have kind of trading range wiki behavior like this, again, we can still look to stop hunt that here. You gotta understand, you're pretty close to this, so you want to get a big push, but these are big bear bodies, so it's a pretty aggressive test. So it's like, all right, you know, that's reasonable. We can justify that. Let's see if we can get a push for a scalp. I cannot justify that for a swing, but I can justify that for a scalp. You get the break of the low at 2. There's a lot of bull stops down right below the wick low at 2, because it's the obvious point to place it for everyone getting long, at least for swing traders getting long. And you accumulate a lot down there. And what are those? They're they're market sell orders, essentially, when the stop triggers. So what does that do? Ratchets down the bid and does this. Take profit for a scalp, because we know, trading range. The stop hunting will probably work more often than not. Slightly more often than not, right? That's all we need. And then it'll probably at least retest the trading range, because it's a range. So we don't go for a swing on that. We go for a scalp. At least that's what I do, man. Do whatever you want. By the way, I never want to come off like I'm saying this stuff works every time. Of course it doesn't. It doesn't. If you're new and you're thinking that, you're like, wow, it sounds like this guy, all he does is win. Nope. Nope. But I make money. I don't need it to work every time. Does the casino win every hand? Point proven. All right, 18. What you got for us? We're on the 5-minute chart here. Yeah, every once in a while I'll look at something and I'll say, oh, I think I got the context wrong there, but no, it's typically just next trade. Next trade. A really good trade won't always work. Look, if you still think that that's, I'm not saying you, but if you're listening right now and you're like, oh, A+ setups, they work every time. No, you got a big thing coming. Accept early that all you need is a little bit of edge, and then you can scale and extract as much as you possibly can, but that doesn't mean that this is always gonna work. What a ridiculous thought process. You're in the business of positive expected value, not winning. You're in the business of losing and knowing how to still take those while maintaining your positive expected value. If you don't even know what business you're in, you're fucked. You understand? So just make that switch right now. Be like, oh, okay. Just need positive expected value more often than not, and we're making money. Cool. And then scale horizontally. All right. All right. So, bar 19 here. We're a minute 23 out from the close. And a whole lot of back and forth now after that stop hunt, which is normal. We just got to let this market kind of reset and give us our next setup, and we'll put it on. All right, 20. Can you do it for us? Let's see. All right. All right, sorry guys, I had to adjust my lineup in my copier. Now, question for you guys: when you are ready to take a payout, if I'm going to request a payout that night on the account, I typically take it off the copy trading list, because at that point, why continue to risk inside of it? I know a lot of people, do you guys keep trading? I'm curious what your guys' approach is. Again, I will repeat the question. Well, it's not really a question because I'm going to keep doing what I do, but when you're ready to take a payout in a funded and you're going to request it that night, do you pull it from the list when you're done trading it for that day? Or I guess once you've taken a trade in it that day. I typically pull it from the list. Yeah, I mean, the way that I see it, if you're going to request the payout, especially if you have a payout pending, the way that I see it is like, okay, if you win a trade, that money will be for your next payout request in about 2 weeks. But if you lose the trade, then your pending payout if you dip below what you requested, is going to get denied. So I pull it from the list. I think that makes all the sense in the world. Apex is so fast these days. It's like next day. I requested last night multiple accounts, this morning approved, and I'm back trading those accounts. I'll request tonight in some of my accounts, and probably by tomorrow morning, I'll be ready to trade them again because they'll be approved. They're so fast. It used to take like multiple days at Apex. It's been like overnight in almost every case, at least for me lately. I don't know about you guys. Hopefully it's been quick for you guys too. All right, there's a close of 20. Absolutely nothing there. Big old wiki inside closes out of both 19 and 20. Let's see what 21 brings. All right, 21. 355 out here. Bears are trying. James, hey, know you used to trade on that 2-minute. When you made the switch to the 5-minute, was it based on just the numbers you were finding for percentage on your trades, or was it more because of the volatility? It was the volatility. James, when I started streaming, it was on the 5-minute. I think a lot of people don't know that. I think a lot of people came in here when I was trading the 2-minute, and the reason I was doing that was because volatility was garbage, and the 5-minute looked worse than the 2 for a period of time, which is not very common. When the 5 is good, I like the 5 because it brings quality, average quality of each setup up a bit. Now, quantity does go down compared to the 2, but I like that better quality per trade on average. Now, if we were in a market where the 5 just was ugly as all hell every day, maybe I'd go back to the 2-minute. But average quality per trade goes down on the 2-minute. and you get more trades, which doesn't necessarily make it better or worse. It just makes the math look a little different. It's like you get a little less edge, maybe per trade, but you get a higher quantity of trades to beef up the sample size. So, pick your math. Pick how you want to trade. Yeah, I hear a lot of traders avoid caffeine during trading. Would you say it does not affect your trading or helps? I like caffeine to a point. I really, really, really like caffeine to a point. I don't go crazy on it. Now, if you've got your fingers on the hotkeys, if you're sensitive and all of a sudden you're like shaking, trying to press the hotkey, you've gone too far. But I like it. I like it. A lot of people are naturally, just without it, already a little jumpy, to like a little anxious to jump into a trade. And they find, I hear this a lot, they find that when they trade caffeinated, it makes that worse. I'm not really that at all. I find that it doesn't really impact it at all. All it does is, I don't know, maybe lock me in another 5%. You're going to be addicted to something. I think, caffeine is not the worst thing in the world. Now, when I say that, contextually speaking, I'm not talking, 2 grams a day. That's ridiculous. But, I don't know. Worst things to be addicted to, right? But listen, hey, if it's just person to person. If caffeine does make you do this and you're on the hotkeys and you're like, fuck, and you're shaking, that's a problem. Or if you're naturally like anxious to get into a trade, that's a problem. Sometimes I think I need a little more, like, all right, let's do this. Let's put it on. All right, 336 out. Now, you know my favorite supplement of all time? Can anybody guess? Not really a trading supplement, but I guess you maybe could be. My favorite of all time. No, not Jack 3D. I don't think I ever had the opportunity to even try the original. Well, obviously creatine. I mean more like a feel. I guess creatine is kind of a feel. Now, creatine is obviously tremendous. I think everybody, including women, should be taking it and drinking a lot of water throughout the day with it. All the old talk. When we were all in high school, everyone's mom was like, so-and-so's on creatine, like it causes kidney problems. And you're like, oh my God, and you believe that shit. It doesn't. The only reason it ever would is if you're massively dehydrated, like 80% of the world always is. So don't be that guy. 3 to 10 grams, great place to sit. I try to get like 10 grams a day, creatine. But no, you know which one I fucking love? And it's a love-hate relationship, is beta-alanine. Now when I say a love-hate relationship, Calc got it. There it is. I fucking love that shit. You either love it or you hate it. I love it. Yeah, the creatine thing is funny. It's naturally occurring pretty heavily in red meat, actually. It's a tremendous supplement. It's one of the ones that actually works incredibly well. When I say I think everyone should be taking it, I mean healthy individuals, obviously. I'm not like a fucking doctor. But 55 seconds out here on 22. Let's see what we get. All right, 15 seconds out. Now what I see here is a wedge. Bottom of this range. Into a little wedge. This kind of thing is pretty tough to find edge in. You just gotta let it break. Well, ATR is holding up. I'm currently sitting at about 21.5. I'd love to see that expand, though. I gotta tell you, coming into FOMC, a lot of times what we get is just kind of a steady ATR until FOMC hits. Oh, we got 3 minutes left. You're on bar 23. Yeah, so reminder for you guys, FOMC today is at 2 o'clock Eastern, 1 o'clock Central, noon Mountain Time, and 11 a.m. out on the West Coast. And if you're trading a Take Profit Trader Pro account, do not trade the release of the FOMC interest rate decision, because they will take it away from you. You're not allowed to. But you can trade before and after. Okay, minute 15 out here. All right, let's see here if 23 can give us a half reasonable bull close. We have maintained the wedge. Then 24 gives us a reasonable opportunity to kind of head back toward the high end of this full intraday range. So we got to see, at least I want to see how 24 closes up if 23, which is the current bar, can close clean. All right, kind of a wiki pullback there on a 23 before the close. That's showing me some bull insecurity. So we got to see if the bulls can clean this up here on bar 24. If they give us a nice strong bull body with a nice clean close up top without too much wick, then we might have something here on bar 24. But I absolutely will need to see that. All right, well, one trade here so far today. Doing all right, but we got to see, man. I want this thing to open up and give us some more opportunities here before FOMC. Acquired, that is a Celsius, my good sir. Hey, Celsius, you want to ditch all the lame fitness guys? Come sponsor a trader. Fucking open to it, let's talk. All right, 235 out. You know, some of these companies, man, this is where the action is. The traders. Fitness is played out. Trading is the new wave. Just kidding. All right, bar 24. Hey, good morning. Doing well. 30 seconds here. 24. Okay, now, there's no stop on here because the low of day was 10 minutes ago. We went deep on this yesterday in the live trading on the tomb, but when it's 10, 15 minutes, that's not enough time for these things to accumulate, okay? So what I gotta look at here is I still think this is just a big old wedge. But wedges don't hold for very long. They tend to break. Now, which way do they break? It's probably like 52-48, with this being the slightly stronger level, this being the slightly higher probability of breaking. But then we can look at this again and say, yeah, but the whole day is kind of a trading range, so it brings it back to maybe 51-49, which I round off to 50-50. If it's less than 55-45, I round it off to 50-50 and say, all right, let's wait for a more definitive bar. Now, if bar 25, which is one we're currently on, came way down and closed beneath the week low of 22, you have an option. You can either take it to the short side with a stop limit seller, I could, or I could wait for bar 26 to put in a third consecutive bear body, which is a lower probability of getting the trade on because it's a lower probability that that'll happen. But what does that say about the entry on bar 25? It's not an incredibly high probability trade, but the reward to risk is good if it does work. It's all just math nuance. You have a decision to make, a mathematical decision to make on every trade. You want to take the slightly earlier, slightly lower probability, slightly higher reward to risk trade? Or do you want to take a chance that you get the higher probability trade, but you might not? But with that higher probability trade on the third bar, if you wait for the third bar, in this case it would be bar 26, you get a worse reward to risk within reason, right? Because you're waiting for it to go further. Doesn't make either trade wrong, by the way, as long as you get the proper setup on both. But it makes the math look different. Listen, guys, if you're not thinking about the business of trading that way, you should. You should start. I think it's going to help you a lot. And it's not complicated. It's not that confusing. It's just a spectrum. You know, take your pick. If we want to learn RAM, do you have some type of course? No, I do not have a stagnant course. I think stagnant courses suck because they don't evolve, which is awful, I think, in trading. And something as nuanced and evolving as often as trading, I'm not really interested in filming a course and selling it, at least not right now. I'm not interested in doing that. Because it dies. As soon as I stop filming, it stops evolving. But the tomb is living and breathing. It gets hours of exclusive content every week. All about RAM. Which I think is 10 times better. All right, 25. What you got here? 60 seconds out. All right, 26. 25 set, closing inside of 22 and 21, the wick close, so we wait for 26. And let's see what we get. All right, so you see why we hold off, or at least why I hold off on 25, right? It's an inside close, and a lot of times you get this hesitation because the full day is still trying to hang out as a trading range because the entire day's range is less than 100 points. It's about 90 points for the entire day's trading range. So I need 26 to close as a moderately sized, clean bear body for me to be interested. Otherwise, I'm just not on 25. All right, 26, what you got? All right, let's pop over to the execution screen, just in case we got to do some executing. Let's see. All right, 25 seconds out here in the close of bar 26, and we are trying to bounce back higher. This is not what I would need to see to put out a short, obviously. I would need to see this close as a very clean bear body, way the hell down here. These bulls, I think, are sold on either a soft bear channel or bouncing this back up into a full day's trading range. So let's see what 27 brings here. All right, guys, hey, be back in a couple of minutes. Quick break. Don't go anywhere. Hey, like the stream, by the way, man. Be right back. All right, welcome back. We are 2:53 out here from the close of 5-minute bar 29. And we are in a big old back and forth little range right now. So we got to let this thing do its thing until we get a couple of consecutive bodies within reason, giving us a setup. Now I do see more of a soft bear channel from bar 16 until now than anything else. So I got to consider that. Let's see what 29 brings. All right, 30 seconds out here from close of 29. Well, one trade so far. Beautiful scalp. And I gotta tell you, we so far on the basically entire day caught the best trade thus far. That was that little scalp on the close of 16 right into the open of 17 with a stop limit sell. Beautiful little scalp. Since bar 17, man, it's been all inside closes. We'll get something here. Obviously, FOMC, hey, don't forget, FOMC today, 1 p.m. Central, 2 o'clock Eastern. Yeah, big old doji there on 29. Well, ATR, the good news here is that ATR is holding up reasonably. It's still 20 plus, which is very good. Well, I say very good kind of tongue-in-cheek because that's better than what you might expect on a daily today for it to fall to like 9. Anything above 10 we can work with. Anything above 20 is better. Anything above 30 plus is best. So to hold on to 20, I mean, I am happy to see that, even though we're not really getting a whole lot of price action set up since the close of 16. Every candle numbered is just the number bar since the New York Open. You know how everyone's always like, oh, the 11 o'clock Eastern bar. Oh, but what do I do with the weird, like, mountain time? Or what if I live in a state, you know, that doesn't do daylight savings? It's like, it's just confusing as all hell. Bar 27 since the New York Open. Everybody, I don't care if you're in Australia, Europe, Tokyo, fucking North Korea, baby. It works. All right, bar 30. Book, are bar numbers part of your RAM strategy? Well, you know, you don't need to have them, but I encourage you to have them, especially, you know, the two members, they all put it on their chart just because it's easier. Someone will go into the questions channel or, you know, that day's Tomb Talk. They'll say, hey, you know, bar 16. I got short for a scalp with a stop limit sell. What was the context there? It was clearly a range. Was it too close to the low of bar 2 to hunt stops? We don't ask basic ass questions in there, man. I mean, hey, there's no wrong questions, but the people in there are very high level and they're making very fast progress. So yes, they put it on for the sake of ease of explanation, and it's easier throughout the day to say, okay, oh, bar 25, oh, inside close at 21 and 22. Listen, you cannot be this efficient if you're, you know, fucking around with, 10, the 10:35 bar. Oh, but Ninja Trader labels the time differently than Thinkorswim. By the way, what time zone are you in? It's like fucking way to get nothing done. You know what I mean? 25, inside close at 22 and 21. New York session open, same time for everybody. Just put them on your chart. Doesn't mean anything else, just numbering the bars. All right, 31, can you fix this up? We clearly are in a range since bar 26. Little sideways trading range. You can see that very clearly on a lower time frame, like the 2 minute. All right, 2 minutes out here from the close of 31. All right, here we go. Here we go, 30. 45 seconds. Now, context. I see a soft bear channel, but that doesn't mean I'm uninterested. I just wanted... Well, let's get started here, actually. Gotta go to the execution screen. I would want to see it clean. I would want to see a nice clean close, so... Let's go. Alright, 15 seconds out. Copy trader engaged. We are in a soft bear channel, but I like this bar compared to every other bar closing beneath the wick low of 28. Place that guy right below 31. Give that about 20 seconds. See if we can get a fill. If not, pull it. No fill, no trade. You know how it works around here. I want quick resolution if the bulls take this higher. I do not want to participate. And there we go. We will get a fill. Put that stop right where it needs to be on the signal body. Suck that down a bit. And let's see. Now, this trade, again, soft bear channel. So I fully expect this trade to maybe take some time here. That's all right. But the quicker, the better, obviously. But you can't expect every trade to work in, 30 seconds. Like the first trade today. See if the bears can take this baby lower. ATR 21. I'd like to get at least full ATR out of this guy. So, let it do its thing here. Risk is managed, server side, offloaded to the computer. On a break up above the signal bar. All right, bar 32. Turn this into the biggest bear body of the day. Dump that thing off a cliff. We'll let you have a little bit, bulls. That's all right. All right, bulls trying here. Let's see. See if they got it in them. Take out that signal bar wick high on 31. ATR here 22. Big old doji close. Tiny little bear body out of bar 32. See what 33 can bring here. ATR 21. All right, bears. Let's take this soft bear channel and continue that little aggressive move. Good setup. Now we just see, hey, does it work for us? All right, ATR here currently sitting at 22. All right, there's the open of bar 34. Inside bull close. You know, not the greatest bar in the world, but it's not like it's showing a hell of a lot of confidence out of the bulls. But I sit where I sit. I'll make decisions bar by bar, but it's relatively rare. There's you know, a need to. Except on the take profit. ATR 21. All right, Bears. About time to step in here, baby. All right, 90 seconds here left on bar 34. All right, this bar will roll over here in about 15 seconds. Small inside bull body. All right, Bears, you're putting me to bed here. There you go, bull. What you got? Risk is managed server side on the break of the wick high of 31. See if the bulls got it. If they want it, they're going to have to pop it up through that wick high of 31. Gotta make them earn it. Now, that would keep the soft bear channel intact, but the other option, and we'll cut it there. The other option, I mean, I'm not gonna go risk the wick high of 23. I'm not looking for a big swing trade here. More of a reasonable scalp slash swing, right? Again, not a scalp there, because I was looking for at least, probably better than a full ATR. Kind of a mix, though. I'm not looking to hold that thing all day. All right, moving on. Let's see here. How are we on? 35 closes up. $225 out here from the close of 35. All right, 60 seconds out here. Nice body here on 35. That right there so far is probably the biggest bull body we've had. It is yeah, it's the biggest bull body we've had since 6. So, you know, right now my number one thought is the context here is obviously here, right? So 30 bar 36 is going to be a big deal. If in the next 30 seconds the bulls can close this up nice and strong up here by the 20 EMA. So let's see what they got. Well, guys, I got to tell you, I have got lunch waiting, so I got to go hit that, man. Hey, FOMC at 1 o'clock, okay? If you're trading take profit, don't trade the FOMC release. They will take your account from you, at least if it's a pro account. Apex, do whatever you want, but news, at least the market reactions news, is going to be 50-50. Hold off. I think it's only going to hold you back over time. Because it's not 50-50, because you're paying commissions and fees, right? A little bit of slippage here and there on the losers. So I think trading news is a losing battle, and it's definitely not going to get you to consistent payout territory, because, you know, Apex, they let you trade the news, but they have the 30% rule, all that good stuff. So, all right, guys, hey, if you're trading the afternoon, stay patient. Okay, just chill out. This is supposed to be relatively enjoyable. Hang out. Wait for the setup to come to you. Again, I would avoid FOMC, at least the initial release if I were you. And I'll see you guys tomorrow morning. All right? Stay disciplined. Stay patient. See you tomorrow. Have a good day.